All right, welcome back, traders. It has been quite a few weeks since I've done a video, and I got creative. I decided, why don't I go over my trading rules? There's been certainly helpful for me to trade well, and hopefully you get something out of it. So, first off, I want to leave a little disclaimer. These are rules that I have either picked up from a mentor, from trading books, from my own personal experience trading different trades and different stocks. And so this is all personalized for my trading system. That does not mean it has to be for your system. This does not mean you have to do anything with or without these trades or these trade rules. They're solely for me. And if you decide you want to maybe take something from it and discard what you don't like and take what you do like, you're more than welcome to do that. But this is solely, trading rules that are specifically made for me and for my personality and for my trading system and setups. And so we're going to go right through them. We're going to go through all 1 through 15. I do have 15 of them. And then I'm going to go over, how do I actually follow these rules? And then what do I do when I don't follow these rules? Like, how do I kind of come back from that? So rule number 1 is cut losses quickly, but cut losses intelligently. So where did I get this rule? So if you follow Tim Sykes, his first rule is cut losses quickly. Now, if you're a fan of Tim Grittani, his rule is cut losses intelligently. And so what I've done is I've kind of done both, where if a stock breaks my risk, I'm cutting quickly, right? I'm out. I don't need to, find out if it's going to come out or go back or fake me out. Like, if my risk is broken, I am cutting it quickly. Now, by intelligently, I want to make sure I'm picking an intelligent risk, right? I'm not just going to cut a trade because it's going against me, right? I want to pick a risk level that's going to give me the best odds of letting that trade plan work or give me the best chance of profit. So it's kind of a mix of both where, I'm picking an intelligent risk, but if that risk is broken, there is no, I'll wait for the next dip to cover, or, I'll see if this was a fake out. Like, no, I'm cutting it right away. So it's cutting loss quickly, but it's also picking an intelligent risk at the same time. Rule number 2, trade to trade well, not for profits and losses. So this is essentially, not looking at my P&L. Some of you, I know some traders hide them. I don't personally hide my P&L, but I also really don't look at it very often either. Like, when I'm trading, I want to trade the chart. I want to trade, the catalyst. I want to trade the price action. I'm not worried about, or I try not to worry about, how much am I up? How much am I down? I'm trying to trade the best I possibly can, which is not predict, but necessarily react and follow the trend of a stock. I'm not worried about the profits or losses. So that's one rule. Rule number 3, do not short earnings winners unless extremely overextended. So now this rule is a little bit different where it's not specifically about earnings winners. It's really the rule technically is just don't short anything because it's up, right? So many traders want to short something just because it's up. And that's not enough, right? And I wrote don't short earnings winners because for me personally, I happen to do that a lot with earnings winners where maybe earnings are good, maybe earnings are bad, doesn't matter. But the point is I end up maybe shorting too early. I end up maybe shorting a stock that doesn't deserve to be shorted because the earnings are actually really good. But, I don't want to play that numbers game, right? The point is know why a stock is up. Is it actually good news? Is it actually bad news? Is the price action actually telling you and showing you it's good news and the stock is strong kind of thing? So it's just, unless it's overly extended like a supernova, don't just short something because it's up. Really look deeper into the story behind the catalyst or the news, that kind of thing. Rule number 4, do not chase stocks up or down. There'll always be more opportunities. No need for FOMO. So this is kind of all in one. There's 3 sentences there, but they're all in one where it's like, if I'm chasing a stock up or down, it's typically because I have FOMO. It's typically because I think that this is like, a great opportunity and we're not going to see another opportunity like that. And, the longer you're in this market, the longer you're trading, you'll realize that's just not the case, right? There's always going to be more opportunities. And so no one stock is worth you chasing and making a loss bigger than it needs to be or ruining your average. You just need to stay patient. And so that's kind of this rule for this. That's my rule for this, where I'm just going to not worry about missing a play. Like, there's always going to be more available, which will hopefully make me patient on my entries and exits when there are opportunities available. Rule number 5, respect price action. The market is always right. Price action pays. This happened to me when I first started trading, where I would disrespect price action, right? I would think I knew more than the market, or that I could I'm in a trade that the market its price action should follow the way I want it to go, and that's stupid, right? That's not how this works. The market is always going to be right, whether it's rational or not, whether it's irrational or not, right? The price action tells you where the stock wants to go. right? It doesn't matter what you think. The market doesn't care what you think. It's pretty much me just obeying to the market. If a stock's going against me, I don't need to wonder why, right? The market is telling me that I'm wrong, and that's all I need to know. So respect price action. Number 6, never rationalize, do not be subject to bias. Now, of course, we're all human beings, like everyone's subject to bias, but I mainly want to go over like never rationalize, right? I see so many traders, and I used to do this too, where maybe your stop loss got hit, and you're kind of thinking, oh, it's okay, like, let me give a little more room, or oh, this isn't my pattern, but I'm going to short it anyway, or I'm going to buy it anyway. You're rationalizing. You're not being objective to what is in front of you and what you're seeing. So that's kind of a rule for me to like see reality and see the stock and see the news and see my setup as what it is. Don't try to change my reality to rationalize. Oh, but this is okay. Like if I broke a rule, I'm breaking a rule. There's no rationalization of it's okay because of this. I don't want to play those games. Rule number 7: do not be an early short seller. Short the backside of the move. Now, you never know when it's the backside of the move, obviously. But I used to be, when I was learning short selling, I got a bad habit of just thinking I could short it whenever I wanted, right? And being early and kind of going back to having that FOMO of, I should better short now. And that's just not the case. I've learned, if there's anything I've learned about short selling, is that you have plenty of time. You could miss half the backside, still short, and there's usually plenty more backside in this small cap space that I'm trading. So there's no need to be early. Wait for a clear sign of a backside move, and that's when you can get short. It's not worth your energy to try to pick a top. You just don't need to be there when the bottom comes around. So that's that. Number 8, look at the big picture. Do not get caught up in a 1-minute chart. Now, I do watch 1-minute charts, but I created this rule because I found myself getting very caught up in watching the 1-minute chart. Now, maybe my emotions are high, I'm in tunnel vision, and all of a sudden I find myself looking at this chart, and 1 minute all of a sudden freaks me out. Like just 1 minute of price action, doesn't even have to be a big candle either way, but I start getting so sucked up into what a minute by minute basis this stock is doing. And that could be just so toxic for keeping a bigger picture, right? Right, looking at the daily chart, like where's this stock in its framework or in its kind of phase of setups that you play. Don't get so, don't weigh so much weight on a 1 minute of the day. Look over hours, look over 15 minutes, look over days. Just keep the big picture perspective of what you're trying to look for that's going to happen from a play or a setup. Rule number 9: buy weakness and sell strength. So I break this rule when I do the exact opposite, right? Say I buy strength and I sell weakness, like I literally bought a top and I sold the bottom. That's when I break this rule. I'm not gonna, just because I don't buy weakness every time doesn't mean that I'm a bad trader, and just because I don't sell strength every time, or just because I maybe sell weakness every time, doesn't mean I broke this rule. This rule is typically for when maybe I'm on, emotional tilt, and I literally do both, where I buy a top and I sell a bottom. Like that clearly indicates for me that I am not seeing the market clearly at all. So that's what that rule is for. Rule number 10: is this trade ideal? Don't waste energy on low odd setups. Stick to setups. So this is a trading rule for, am I sticking to setups I know? There's plenty of setups that I may know of, but they're not my setups, right? I may have heard, a trader on Twitter or a trader in this chat room, trading this setup, but is it mine, right? Is it something that I have consistently been profitable on? And if it's not, then it's not for me, right? I've caught myself many times trying to trade a stock, and after I'm done trading it, I kind of ask myself, like, well, what setup was that? And if it's not a setup, like if it just, I thought the stock was going to go up, so I bought it, or I thought the stock was going to go down, so I shorted it, like that's not a setup, right? That's not a statistically backed edge in the market that I have made money on. So that's what that trade rule is for, making sure I stick to my setups. Have a trade plan, meaningful risk, entry, and potential profit targets, but don't predict profit targets, react to the chart. So this essentially is from the first 4 words, have a trade plan. And what that trade plan consists of is having a risk level, having, a confirmation entry that you'd like to enter the stock in, and where you think that can go, right? Whether that's reacting to the chart as it works for you, or having a general guideline of, okay, I think it can get maybe 10 to 20% from here, or 5 to 10, whatever it is. But ultimately, you can't take a trade. Like if you don't have a trade plan, then you don't have a trade, right? When you're taking trading as seriously as this is, you have to have a trade plan, It is the first thing before you take any trade, and you have to have it. And so if I don't have one, I broke that rule. That would be silly for me to take a trade and not have a trade plan with all those things listed out beforehand before I even enter the trade. Rule number 12, do not let missed or poorly executed trades influence your next trade. Send yourself no revenge trading. So I have not broken this rule in a very long time, which is really cool because it shows me I've gotten better at it. But I used to break this rule all the time when I was beginning, where I was maybe unprofitable, right? And so just keep losing and losing and losing. I'd let one loss affect another loss, right? I'd get frustrated. I'd get angry. I want to revenge trade. I want to try to get back on a stock. And so ultimately, that's just not good, effective trading. Like you're not going to trade well if you let the last loss affect this trade, right? You have to be okay, and you have to completely kind of wipe the slate clean every time you take a trade, whether it's a win or loss. And this could be the opposite way too. Say I made a big win, and now I think I can just start taking bigger sides because I'm on a winning streak. Like, I don't believe that either. Like, every new trade, your slate should be clean from any past trades, right? You should not be emotionally attached to anything. It should be a new trade, completely independent of any trades you've taken before. So that's what this rule is about. Rule number 13, greed kills. There's a reason you have an instinct to sell into a spike or panic, or exit into a spike or panic. Don't play games, get out. So, the word, I don't really like the word instinct because it's, when you're first starting out, you don't have an instinct to tell when you want to exit or enter a trade. But I made this rule because I found myself quite a lot of times, say I was short a stock and the stock dropped 10%, and that was my goal, right? Say that was what it was. But my exit, my cover was, 2 cents below where the stock was at. And I found myself getting very greedy in a lot of those scenarios where I let 2 cents be the difference between whether I want to cover from a 20-cent gain, And so it ultimately realized, like, stop penny pinching, right? That's why I write, don't play penny games. Like, if a stock is very close to your goal, but it can't get to your goal, like, stop trying to squeeze out like water from a rock. Like, just cover, just exit. You're not going to regret taking profits 2 cents away than having the trade completely go back to where your entry was because you couldn't just take profits when the trade worked. So that's for that. Rule number 14, do not emotionally exit or enter a trade. Wait till your risk is broken or no info breaks your thesis. If your thesis is still intact, stay in. This rule was made for me specifically to stay emotionally calm in a trade. Say I'm increasing my risk level, so if I stop out on a trade, it's going to be a bigger loss than I'm used to. This rule is so I'm not emotional, essentially, right? I want to make sure I'm remembering my trade plan, I'm remembering my risk, I'm trying to remember the reason why I entered this trade in the first place. I'm trying to stay calm, because it happens, and I'm sure most people can relate to this, where if you've entered a trade and all of a sudden that trade goes against you, and maybe your stop loss is only a couple cents away, you start freaking out a little bit. I know the more experience you get, the less freaked out you'll get, because I haven't broken this rule in quite a while. But I keep this rule there because it can happen. I could have an emotion. I could just decide to have an emotional day and say I cut a loss before it breaks my risk, and then all of a sudden the trade works. That's what this rule is for. Is that follow the trade plan, your trade plan, and your trade thesis all the way through. Don't let an emotional or irrational thought change your thesis of how you want to trade that stock or that setup. And lastly, rule number 15, learn from your mistakes. It's a pretty basic rule. It doesn't happen all the time. There's plenty of times I make plenty of mistakes or break some of these rules, and I have to break them again once or twice to finally, stop it. But it's just very obvious to me I need to keep rule 15 because, if you're never trying to learn from your mistakes and get better, you're just never going to progress as a trader to the ultimate level that you want to get to. So that's that. So now that you know these rules, that's great, Kyle, but how do I actually follow them, right? It's easy to have them written down and read them to myself, but how, as a trader, do I actually follow through on these rules? And this answer is going to be kind of black and white, a little bit too straightforward of an answer, but it's in my mind, I have made a very deep, psychological connection that if I don't follow these rules, I will not be profitable. Period. End of story. There's just going to be any excuses, right? If I want to be a profitable trader, if I want to make money from the market and trade for a living, I need to follow these rules. If I follow these rules, I'll make money. if I don't follow these rules, I will lose money. It's, like an analogy of, if you want to play basketball, you can't run with the ball. You have to dribble. If you want to play soccer, you can't touch the ball with your hands. You have to kick it. And it's, and if you don't follow those rules, no one wants to play with you, right? If you don't follow these rules, the market's just going to take your money and it doesn't want you around. It's very straightforward for me, where these are the rules. You either choose to follow them to make money or you don't. And if you don't follow the rules enough, then you obviously don't want to be a trader for a living. It just, it takes a lot of discipline. I understand it's hard to get to this point, but it's just such a deep, deep habit of mine that these are, my 15 commandments, if you want to call it like that. Like, I follow these, right? I do whatever I can to follow these rules as much as I possibly can. And so obviously I'm human, right? There are some times I don't follow these rules. There are sometimes I fail to execute on a certain trade because I broke some of these rules. And so, I'm human, you're human. We're not perfect. And so there are times when I do break these rules. And when I break them, I want to know why, right? I want to try to reduce the occurrence of breaking these rules as much as I possibly can. Maybe I had a crappy day yesterday because I had family problems, or, I didn't have the best conversation with someone yesterday. Like, maybe even outside factors that might affect you. But the point is, you want to find out why you broke it and then minimize that altogether. Like, some of these rules I might have made or created new rules because I broke another rule, right? And so it's okay to fail, right? You're not going to be perfect. You're not going to be able to follow them every single time, but slowly and slowly minimizing the amount of times you do break them is what counts, right? Again, like I said, we're not perfect. You're going to break them, right? I could be trading for another 20 years, and I promise you in 20 years, I'm going to find a way to break one of these rules. But, but not do anything about it, that's the problem, right? If you just break a rule and not do anything about it, that's when it goes downhill. That's when you're not going to get better as a trader. So, that's it, guys. If you have any questions about any rules, feel free to ask me. But ultimately, take what you want from these, but they're for you. Like, they're for you to decide whether you want to use or not, because all these rules are specifically made for me. So thanks so much for watching, guys. I'll catch you guys next time. Peace out.